this video, I'm going to walk you through a breakdown of a £6,000 trade I currently have running on Euro USD, which I entered following a Head and Shoulders pattern. I'm going to take you through step by step how I found the trade and also how I found the entry to get it timed perfectly for my stop loss. The idea of this video is just to help at least one person that is struggling in their trading journey. That could be from anywhere on placing trades to being a consistent trader. We need to get everything under wraps so you can be placing trades just like this. So here is my proof so you know I have the live trade open. There it is on Euro USD. Price is currently just pulled back into 4% profit, hopefully before a second push down to our TP. If you're new here and don't know who the fuck I am, I'm Jack Beanie, the main trader for the Limitless Trading Club, and I've been trading for over 7 years now in the Forex markets. I only focus on the Forex markets because it's what I'm good at, and I also have multiple funded and personal six-figure trading accounts. Let's get to the computer. So I will start with a top-down analysis, and anyone doesn't know what that is, it means you just start from the weekly time frame, so at the top of the time frames, and work your way down all the way to the 1 hour time frame, which is where our entry will be placed. So when I'm looking for the setups, we'll always start on weekly time frame and then look for support and resistance. So I'm using support and resistance zones, and then we go from there into patterns. So first of all, we look at to mark them out on the weekly or daily time frame for support. And what makes a support zone? It needs to have at least 3 touches of previous candle data. And I mark these in the grey lines you can see here. You can mark them in whatever you want, and you also have to think about them as being more of a box than you do as a perfect zone. So a zone would look more like this instead of a line, but I do a line because it makes it look neater on your charts and it's less stuff going on there. So first of all, plot that out. As you can see, I've got that already marked out from when I've done my analysis, and we had multiple touches. So our resistance is above where price is, support is below. Support will always carry the weight of price, and resistance is where price is trying to break above but hasn't broke above yet. And they can flip over, so resistance can become support. So if price breaks above the resistance zone, that then will become support, and you will then have a new resistance zone above. Same for if price is the other way and in a bearish movement. So we're looking at here, first of all, we had a bullish movement, so price is moving upwards. We found a weekly resistance zone that price rejected twice, so we got a support zone and a resistance zone marked out with clear rejections of previous data. Then we drop down to the daily time frame to now start seeing if we can look for any patterns in the markets. What I'm looking for is for a double top, a double bottom, a head and shoulders, or an inverted head and shoulders. For this instance, you're either going to have a double top or you're going to have a head and shoulders. We've got both. So on the daily time frame, you can see price has got a double top rejecting that weekly resistance zone. Price pushed up once, tested that zone, pushed back down to a new point, creating a new lower low. Then price pushed back up again into that resistance zone, creating a new higher high. So price here it overtook this high here and created a new higher high. And then price rejected that with a 4 hour time frame head and shoulders. This is where we start fine tuning into the lower time frames to really fine tune that entry and catch that bigger push, but with a small stop loss. That's the ultimate goal, is we're just trying to catch from A to B or B to C, but we want to try and get a smaller stop loss, giving us a better risk to reward ratio, meaning we just earn more off of each trade. So once we've now got that clear structure on the daily, we're going to drop down to the 4 hour time frame and see what else we can find. Here I found a head and shoulders pattern on that second double top. So what we did, we marked that out with some clear zones. Price had already been moved over here. So first of all, we got 2 strategies. MSB, market structure breakout. Then I have the MSBC, market structure breakout, and the continuational push. Normally, once price has broken below the neckline of the structure, which is what I've got marked here in this box, that then becomes an MSBC trade. We're after that continuational push. That's what we call. So on here, you can see we've clearly got it marked out, head and shoulders, shoulder, head, shoulder. This come to with an equal to right shoulder. Sometimes they can be bigger, and that is slightly better. But here we had an equal to. Price pushed all the way down and created a new lower low, meaning that we've got price is now reversed and it's changing direction. From there, we then had a pullback right up into the neckline, but it did push above the neckline. So that meant there was no trade. We're now above the barriers that we wanted price to be entering at. So we had to wait for that push and exhaustion if it was going to happen. And clearly, you can see we got that. So we got a push all the way down. It didn't create a new lower low on the 4-hour time frame, but it did create a new low. So what we're going to do there is we waited for the pullback back into a decent zone, which was the daily 50 EMA. So I use EMAs as big barriers and also as guides to where price needs to pull back to next. So here we waited for that pullback in here. So we had this big push. I'll mark that out now for you. So first of all, we had the really big push down, creating the new lower low. Price pulled all the way back up, creating a new higher low. But it pushed above our barriers, above the neckline. So we didn't want to enter that. We waited for a new low to be formed. Then price pulled it back up again to make a new higher low, because we are in a bearish movement. So price is moving downwards. And we then looked to catch a trade from this point. But now we need to stack our barriers and our confluences using our traders checklist. If you haven't got a traders checklist, you need that, and you can find that inside the Limitless Trading Club, and that will help you keep your emotions out of your trades and also your strategy on point. So what we did here, I dropped down from there. We went to the 1 hour time frame. We then looked at our pullback itself. So we used something called Fibonacci to see how much the retracement had done and if the pullback was enough. So we use this here, Fibonacci. So we are on TradingView, and this is a premium subscription, and I've got this customized to my likings. So from there, we then go from the highest bearish candle. So we're not looking for bullish candles, so bearish. So in this instance, we're looking at the grey candles, the highest grey candle of the push. And we go all the way to the lowest grey candle of the push, which was there. And as you can see, price pulled back to what is just shy of the 618 fib. So I would class that as just above the 50%, because it didn't quite hit 618, which is 61.8% of 100% push. But it actually just pushed over 50% pullback. So that's very good. We want at least 382 or 38.2% of Fibonacci. From there, we then needed a barrier. We needed to know that price had hit a barrier and it was going to reject this. And that was, if we go back to the daily time frame, you can clearly see it come pulled back and rejected the daily 50 EMA with an aggressive high test. That was beautiful. From there, we then need entry, and all I wanted entry was here, is we have got a little bit of a weak, but an evening star. So that means we've got a bullish candle. We then have a candle which normally would have a really high wick, but a bit of a doji. Price is unsure where it is at the minute, and a bit of a neutral ground candle. And then we have a very aggressive bearish candle, giving us that evening star. So price pushed up, the sun pushed up, it then stayed still, and then it dropped back down. That's what we're after. That was a clean entry for me on the 1 hour time frame. See here, we had all three of them placed, and I'll zoom that in quickly a little bit tighter for you. We had that all zoomed in beautifully. That was the entry. So we had our engulfing candle, or with our candlestick confirmation of when price is now going to reverse on the 1 hour time frame, rejecting that barrier. Now we just need to know where to place our stop loss. And this is different for every currency pair you place a trade on. So Euro USD, we went for a 30 pip stop. That there give me just over, or just under, sorry, 20 pips of breathing room on the trade. So we went to 30 pips, which is where it was. That allowed me to have 20 pips of breathing room for Euro USD. I would not place a stop loss any smaller than 30 pips on Euro USD, so that would be anywhere between 30 and 50 pips. On something like AUD CAD, I can get away with placing a 15 to a 30 pip stop loss, just because it's a little bit more of a slower mover, and I understand that currency pair just as good. So from there, we then worked out where we needed it. We're behind the daily 50 EMA, we've got the rejection, and price has got a buffer to our stop loss. So it was an entry, but we needed to know where we were going to put our TP. So we can look and find a new area where price can pull back to. We didn't want to use the weekly support zone, because that was absolutely way too far for my setup and this trade for a TP. So we still got 185 pips in this trade. To hit to the support zone, we'd probably be looking at about a 400 pip trade, which is something I'm not comfortable placing. So, as a full-time trader, we looked at the next zone which is possible, which you can see marked here, where this previous low was before we had our double top formed. So we looked at that there is a maximum where we want to go to. We then jotted out and said, okay, well, what do I want from this trade? I want a 1-to-6 from this setup. So a 1-to-6 risk to reward ratio, meaning for every £1,000 I put in, I'm going to get £6,000 back, or every 1% you put in, you're going to get 6% back. That's what I was looking at, and that's what I've been recently placing on all of my manual trades. And that's what we did. So we put a 30 pip stop loss in, we put a 185 pip TP, and that gave me just over a 1-to-6 risk to reward ratio. Price currently is just at 5% with a pullback. So we're now at 120 pips, which is 4%. So we're now waiting for the continuational push once price is pulled back. Price will always pull back over a bigger trade. As you can see here, price pushed into profit by just about 1%. We pulled back up into a loss, and then we pushed back down again. Price pulled back again. It's just called Elliott waves. You're going to get pushes inside of the bigger push. So if we go on the daily time frame quickly, you can see that as one big push, yeah? That you can just see that as 4 big candles that have done one big push. But on the 1 hour time frame, we've got loads of smaller pushes inside the bigger push. So don't be afraid if price is pulling back at any stage. This is very good for a trade. It means it's going in the right direction, but price still needs to breathe. So that there is my £6,000 trade breakdown. You will see next week, or if you go over to the Limitless Trading Club Instagram to see how the trade gets on, and if we hit TP or if we hit our 2.5% stop loss. So I currently have stop loss placed at 2.5% in profit. So if you've made it this far in the video and you want to be placing trades like I've just shown you, head over to the Limitless Trading Club. Link is in description, and I can get you set up for a one-to-one mentorship and our program.